Well, it's kind of interesting from the macro perspective. If they lose the House and they keep the Senate, what you get is gridlock. There'll be no more spending bills for the next 2 years because there'll be nothing done in Washington in that situation, which is good for the markets, for the equity markets. Remarkably, it's kind of indifferent for Bitcoin and crypto because what you find in all of these bills is bipartisan support, which is really something else. You look at Haggerty and Gillibrand, that's their bill, which contemplates Bitcoin as a commodity, and it deals with NFTs and lots of others. But there's 21 bills floating around the Senate and the Hill, and they're all bipartisan. So it doesn't really matter what happens. The only reason there's no crypto policy is everybody's focused on November 8th. But when they sit again in the back end of the year and they come back from holiday, they're still supporting crypto. Both parties like the idea of some regulation on crypto. So it's more about the gridlock of getting no more spending bills that the market may like, because most of market participants have seen enough spending. I mean, it's just, we did the 6 trillion and then we did the Anti-Inflation Act, which was very inflationary. And then we gave the students back all their debt, which is nuts. And so everybody's sick of the spending. I think that's the opportunity for equities. Doesn't really change the outcome of Bitcoin. That will one day be regulated.
After the crypto market saw yet another macro setback, Shark Tank fame Kevin O'Leary spoke on the industry's future. The popular investor has recently changed his opinion on the scope of cryptocurrencies after being a skeptic of the emerging assets. In fact, he revealed interesting facts about his investments in cryptocurrencies earlier this year. About 1/5 of Kevin O'Leary's investment holdings are in crypto. A majority of his crypto investments constitute crypto tokens, currencies, and companies. At the time, he said 16% of his portfolio is now in cryptocurrencies and blockchain.
Let me suggest a different reason to start going long Bitcoin, which has nothing to do with foreign currencies, but a lot to do with policy in the United States. There's two bills floating around, but let's talk about the one that has the chance of actually getting passed in the US after November 8th, which is the midterm elections. It almost went to markup last week. It's called the Stablecoin Transparency Act. Now, this has nothing to do with Bitcoin, but it has a lot to do with the tone of regulation. And the reason I think it's interesting is they're trying to solve for the challenges that occurred in these collapses of stablecoins that were built around algorithms. 62 billion got erased. The regulators got upset about that, although the majority of that capital, because it was decentralized, was in other countries. But this act is very simple in nature, which is why it may pass. It's being supported by both parties. And the reason that's the case is that it makes effectively the US dollar the default payment system worldwide, which everybody can get behind. So if you have USDC or any other stablecoin that's backed by the dollar, and the test to get it regulated is very simple. You're going to get audited every 30 days. It has to be backed up 1-to-1 with a dollar or a treasury bill. All the treasury bills backing the coin or the token have to have a duration of less than 12 months. And if you're willing to go through that scrutiny, they'll issue you a license. Now, if that were to happen, and it may happen very quickly after November 8th if the House flips, and that's the anticipation is House flips, nobody knows what's going to happen in the Senate. That's a coin toss. But even though it has nothing to do with Bitcoin, that'll be the first regulation passed by US regulators. And I would argue you want to be long Bitcoin going into that outcome. So if you own stable coins, you're going to see a lot of interest in institutional capital coming into, let's say, USDC and Circle. Circle, by the way, took in $200 million from Fidelity and $200 million from BlackRock a few weeks ago in a Series F at a $9 billion valuation. They got $54 billion of coin. So end of the day, regulation comes, Bitcoin goes up. And I agree with your thesis that it's a good asset to have if you're in a country where your currency is collapsing. But if institutions smell policy, then you've got a real move up. And that's when you break out of this $19,000 to $22,000 trading range against the US dollar. I think it goes right through that very quickly.
In a latest, he indicated that the future of crypto and NFTs is one area he feels strongly about. Also, the investor recently made some interesting comments on how the authorities should go about regulating the crypto market. Earlier on Thursday, the U.S. Bureau of Labor Statistics Consumer Price Index (CPI) data revealed worse than expected results.
It was 20% before the correction. It's now 16.2. We monitor it every day, just like we do stocks. We're having a very hard time with our auditors and internal compliance people because it doesn't act like an equity. It doesn't act like a bond. It trades liquid 24 hours a day. So mark to market means nothing at 4:01 in the afternoon. So we're constantly monitoring that. But I'm not the only person that has this view. We are adding to that position because in the way we manage our operating company's portfolio, we can have any sector up to 20%, but no more than 5% in any one position. So given that, we have a lot of different positions, and we just put capital to work in Miston last week, that project that came out of Facebook. We're always looking for new projects because we simply don't know which ones are going to survive. But we don't need them all to survive. We just need a portion, just like venture investing. But crypto is going to cause a lot of disruption, in my view, in financial services, which is a large sector of the S&P. So if you don't invest in it, you also have the risk of missing that transition.
The Shark Tank personality has on several occasions in the past expressed high confidence in cryptocurrencies. In March this year, the businessman said there was a capital investment coming into crypto industry from across the globe. The growth rate for Bitcoin, Ethereum, and Polygon is phenomenal, he said at the time.
There's another reason as well. 45 days ago, you could take and you could lend or stake your USDC within your wallet. Let's say you had a wallet at Circle. You were making 3.8 to 5.2% for 30-day or 6-month or 1-year contracts. That was the spread. And you were putting that out very easily on their platform. Today, the only interest you can make is 50 basis points. And you're looking at 2-year treasuries at 4.5%. There's no competition. Part of the challenge USDC has is it wants to get regulated so it can act as a sweep account and start to be competitive against bank accounts that are offering 1.5, 2% interest rates. So you have no incentive to keep your stablecoin in your wallet. You're transferring back to US dollar and parking it back in a fiat currency where you can get risk-free, basically a treasury bill for 24 months, 4.5%. Now, the company's not allowed yet by regulators to do that. That's the Circle for USDC. So they're in an uncompetitive situation, and it's a disadvantage. That's why they want this regulation. They can start, even if they act as a bank, they can compete with bank interest rates. But you have your money sitting in USDC, you're basically making nothing in interest. That's the real challenge.
In his latest comments, O'Leary affirmed that the crypto opportunity is more like a take it or leave it offer. You can't stop it. You either join the wave or get lost, he said in a LinkedIn post.
I'll tell you something very interesting about this cycle. And of course, every recession has a different tone to it. We get tear sheets every Tuesday morning on revenue and free cash flow from most of our companies. So we get a pretty good read on a weekly basis. And so far, and this is kind of interesting, no slowdown yet, no slowdown. And these are consumer goods and services. So we have not seen a slowdown. And so and the reason we care about this data is we're trying to make a decision, excuse me, on what we're going to do with inventory going into holiday in the US. We've got a $110 million decision to make in the next week. Do we build inventory with the assumption that demand remains constant, or do we feel in Q4 that demand will pull back because the Fed's raised rates? And so we've made the decision we're going to go balls to the wall, build out for Q4. We don't see the recession in the next few months. We think it happens next year, but we don't know. And this is the same consideration that every company's trying to make. Inventory matters in a recession because you get caught offside and your capital's tied up in inventory. But we don't see the slowdown yet, which is crazy. We can't hire anybody. Unemployment's still under 4%. And so when you try and hire anybody in food services, you can't. 15 minimum in California in a restaurant. You can't even hire people for $22 an hour. So something's really nuts here. And I think what it is that money is still sloshing around. That 6.7 trillion is still sloshing around the market. And that's why we haven't seen the slowdown yet. Everybody says it's coming. Everybody says we're in a recession. Well, where is it?
He added that people have no choice but to get with crypto, irrespective of the criticism. There are people that criticize me on this, but this is one of the reasons I feel so strongly about the future of crypto and NFTs. When you have new technology emerging that can drastically boost our level of productivity and improve how we process transactions globally, you have no choice but to get with it.
you got to remember something. The reason we have inflation in the first place is in the U.S., we printed $6.7 trillion in 30 months. What do you expect is going to happen when you print that much? The definition of inflation is too much cash chasing too few goods. There's too much money. $6.7 trillion in 30 months, free money out of the helicopter. That's nuts. Of course there's inflation.
In a recent interview, Kevin O'Leary said it would make sense to regulate the stablecoins first. He added that it would not be ideal to have a blanket bill for all types of cryptocurrencies. Stablecoins could be useful right now, he said. So, do you think Kevin O'Leary is right about stablecoin regulation? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.